Good afternoon. Good afternoon, everyone. Welcome to MBO's investor presentation for Q2 2022. This is Jawahar Al-Tamami. I'm the board secretary. We have here today Abdullah Al Hinai, the CEO. We have Giri, our chief financial officer, Balaji, who's the investor relations officer, and Abdullah Al-Bulushi, who's the corporate affairs manager.
Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you, ladies and gentlemen, for this opportunity for us to present the Q2 result of National Bank of Oman. As Jawahar introduced us, my name is Abdullah Al Hinai. I'm the Chief Executive Officer of National Bank of Oman. We have the presentation in front of us. The plan is that I'll take you through the introductory slides, and then my colleagues, Giri and Balaji, will take us through the rest of the presentation. But we will also be guided by your needs, whether you want us to go through detailed presentation or you have specific questions that we can respond and answer immediately. So I'll ask this question probably after I finish my 2 slides. This is the table of contents, and we're going to start with key messages and priorities, and then take it forward from there. So key messages that we would like to convey to the public, and specifically the investor base, including our shareholders. National Bank of Oman has a strong and growing franchise. We are the first locally incorporated bank. We were founded in 1973. Next year, inshallah, in February, we're going to celebrate our 50th year of existence. And that has given us deep and long-standing relationships with prominent companies locally, government and government-related entities, as well as individuals, who many still continue to have their accounts and bank with us. Since 2020, there was a new set of management team that were inducted in the bank with significant banking experience, both locally as well as globally. The new team brings a collective experience of over 100 years in banking. Towards the end of 2020 as well, we have established a new 5-year strategic roadmap, which was approved by the board sometime in Q4 of 2020, which has a clear objective of regaining and improving our market share and prominence in the local market and increasing profitability matrix. As a result, the first 18 months of this strategy, I'm happy to convey that NBO has executed this strategy successfully till date. We have gained market share both on the lending side, on the asset side, as well on the deposit side, liability, after many years of losing market share. We are targeting and expecting to continue our progress in our strategic priorities, which I'm going to present in the next slide, and execute at the pace that will ensure that we achieve our overall objectives. Another key message from our side is NBO has a sound liquidity metrics. We have access to stable and important low-cost deposit from both the institutional side, be it government, companies, as well as individual. As of June 2020, our CASA ratio is close to 66%, with NSFR and LCR ratio at 107 and 152% respectively. Specifically, the CASA ratio is considered one of the highest, if not the highest, in the local market. Technology and efficient digital offerings. There has been a significant amount of investment in the past, and we continue to build our technology capabilities, and with the aim of offering customers efficient digital experiences and the latest technology to serve them better. The final piece of our key message is the shareholder support. NBO has been blessed with a very strong shareholder base with Commercial Bank of Qatar and Suhail Bahwan together holding close to 49% of the bank, as well as deep relationship with many government institutions, in particular pension funds, with close to 27% ownership in the bank. Next slide, please. This is a key slide that encompasses and summarizes our strategy. Like I mentioned, the new management presented a new 5-year strategic plan and roadmap to the board in Q4 of 2020. This strategy is based on 3 key strategic priorities and 9 key pillars that addresses each of these strategic priorities. The first strategic priority is safeguarding. Given the uncertain times that we went through in 2020 and part of 21, given the pandemic and the lower oil prices, it was key for us to maintain a healthy level of funding and capital while ensuring that we maintain a strong asset quality. The next strategic priority is to create value through driving cost optimization and improving income by focusing on low-risk revenue streams and leveraging our client base through partnerships. Finally, sustainability, which aims to continue to invest in building a lasting capability as well as digitizing the bank's operating model for better appeal and ability to scale further. The 9 pillars basically addresses each of these priorities, as I mentioned. The first piece, which is related to the balance sheet, includes liquidity. Like I mentioned, there has been a focus on diversifying sources of liquidity for the bank, in particular sticky deposits and mainly CASA. Like I mentioned in the earlier slide, and we're going to present in the next few slides, NBO possesses a strong CASA franchise with our CASA ratio at 66, which is the highest in the local market. Capital, and that's the second pillar, an important pillar for us. We've concluded a transaction in Q1 of last year to refinance or replenish an existing 81 perpetual bond during a very difficult time. This was placed with our shareholders, which again demonstrates the support and willingness of our shareholders to step in and support the organization. We've also sought the shareholders' approval in the first quarter of this year to raise another $300 million. We are exploring the market and targeting an opportune time to evaluate launching of this capital raise, again through another perpetual bond issuance. The third element is asset quality, and this pillar has 2 elements of it. One, ensuring that we are recovering non-performing assets. As you are aware, we've been impacted by asset quality issues both in our international operations as well as in the local market in the past. But a lot of effort and time being spent by the management, the executive management and the rest of the team to ensure that we pursue all avenues of recoverability. But in addition to that, ensuring that we have the right risk appetite statements, right processes to underwrite high quality assets for our future and learn from our past mistake and not repeat that again. Given that we are still, as a bank, we are in the business of taking certain risks, but we have to ensure that these risks are studied well and appropriately measured to ensure that we, again, like I mentioned, don't repeat the past mistakes. The second layer is on the business model, and that's basically to value create. One is to build up on our existing revenue engines, mainly in the retail and the corporate side, but then also drive new revenue streams and enhance existing revenue streams. A lot of work is being done in that field. Key drivers are in our wealth management business, in our asset management business, as well as remittances and banker are key revenue sources for ourselves, and we're looking at enhancing these sources. The optimization side is basically ensuring that we are spending money in the right place. It's not a cost-cutting strategy, but an optimization strategy, ensuring that every riyal is scrutinized and spent in the right place to ensure value is created for NBO. The third element is partnership, working with different strategic partners in co-creating opportunities for NBO, either through revenue enhancement or optimization opportunities. The third layer, which is the operating model, we are enhancing our brand presence. We are increasing our spend on getting closer to the customer base through different ways. But most importantly, building a customer experience that matches our aspiration. The third element or third pillar within this layer is the digital channel. NBO has been known to lead the digital foray, and we continue to build on this again to enhance our brand and customer experience. The third element is the people and the importance of investing in our people and enhancing their capabilities and skill sets to match with the needs of the time. This is the end of my 2 slides. Again, like I promised, that I'm happy to be guided by your requirements, whether you want us to take you through the rest of the slide in details, or you have specific answers that you want us to address. Happy to hear from the adversaries. I guess we'll keep the Q&A in the end, but please stop us if you have any specific question. And I request Mr. Giri, the CFO, to take us through the rest of the slides.
Thank you, Abdullah. Assalamu alaikum rahmatullah barakatuh. So the next set of slides just quickly talk about the quick introduction to National Bank of Oman in 2 slides, and then a little more context around our financial performance for the first half of 2022. This slide, a large portion of it has already been covered by the CEO when he spoke. Key callouts, as he talked about, we were the first local bank. We are listed here in the local market, and 30th June, our headcount, full-time employee base is 1,455, and we are the 3rd largest bank by the lending book. We've given you a bit of context around the number of branches, the 200 ATMs that we have, and also our international operations, which are primarily in the UAE. The Egypt presence is closed, and the last legal formalities remain. We've given you a bit of context around the segments that we operate in. There is no change in any of these, and we don't seek to change any of them either. Thank you. We've given you a little bit of context around the market share and then the rating agencies and how they rate us. The CEO covered our shareholding earlier on and briefly touched upon the fact that between CBQ and the Suhail Bakwan group, close to 49% shareholding, but you also see good participation from the pension funds and the local shareholding base here. That's really what this slide covers. It also gives you at the bottom portion of the slide. Please note the numbers here are in US dollar millions. It gives you a bit of flavor on the asset size, and you look at how we performed in the first half of 2022. you see that, compared to 2021, the asset base has increased, loans have gone up. So the franchise is growing, and you can see the operating income grow up as well. I'll talk about this in a little bit of detail in the next slide. Very quickly, the financial highlights, and we do have slides covering every aspect of these in the financial section. If we can move to the next slide. We'll talk about for the first half of this year. As the CEO mentioned, we have a strategy which was approved in late 2020. In the first 18 months, we have been executing well, and the results are evident. You can see that our profit was up 41%, the second highest in the industry. We have income growth. We always look at it. We run the franchise for the longer term. We're not into managing the book for each quarter. Though we publish quarterly results, our view of running the business is a longer term view. We are here to run the business in line with the strategy that's been approved by the board. It's a 5-year strategy. But having said that, in the first half of the year, our income grew year on year, and expenses came down, resulting in positive jaws, right? The total income growth was 1.3%, expenses down 1.5%. Clearly, we are growing the top line. We are managing our expenses well, as you heard us refer to optimization, and then obviously managing the credit quality, and in the process delivering good value for the shareholder and other stakeholders. Loans and advances again grew. Similarly, we've talked about our CASA. That's what this slide calls out. This was just an intro to National Bank of Oman. Then we go into very quickly, a slide on Oman, which all of you are familiar with in terms of Oman. So I'm not going to spend too much time. Clearly, obviously, these are stating facts about the country. We all have our views about oil price and its impact on the economy, and also, the surplus that it results, the current oil price results support us. Each of us are closer to the local community here, analyst community, and the investors are closer to its implications as well as what it does. But these are just facts about the country. Clearly, well positioned from a geographic perspective. And at 2022, where the inflation at 1.6%, a real GDP growth of 4%, clearly benefiting from the oil. Yeah. Hi, Vishan, please go ahead.
You have a question?
Hi, good afternoon, Giri and the team at NBO.
Good afternoon.
Yeah, just a few questions, and I'm okay to wait if you want to go ahead a few slides. I thought I'll just raise my hand to be in queue, but I'm okay either ways. I can do it now, or I can do it later.
Why don't we do that?
Okay.
Why don't we do that?
We'll get to you later.
I will zip through the slides in a fast manner, because particularly the Oman slides are all general published information about the country. Then I'll cover a little bit about our financial performance and then open up for Q&A, if that's all right with you guys. Okay. So this slide just sets out facts about the Oman economy. We are operating in a good sector now, benefiting from the oil price windfall. Then let's go to the banking sector itself. Clearly, you are closer to what's happening in the banking sector. Banking sector H1 growth of deposits grew, loan grew 2.4%. So in both these there are growth. I would reiterate the fact that we are growing faster than the industry, both on deposits and loans, and that is a part of our strategy to gain back the market share, which NBO lost between, say, 2016 to 2019. So we're doing that, but growth in a profitable manner. It's not growth for the sake of growth, right? Obviously, if you see the latest reports from the rating agencies, etc., they call out the fact that while there's a CAGR of over the 5 years of asset growth, the profitability metrics are lower. We are aware of the cost structure here in Oman. One, secondly, the credit quality as well, and the impact of COVID. But as we recover from the impact of COVID on the back of oil prices, which are helping the economy, we would think that in the longer term, these matrices would improve, not only for NBO, but across the industry. Similarly, there's a comment about regulatory measures which were supported during the COVID, but other regulations coming in place. And consolidation, when we say is likely, you are aware of what is happening in the market in terms of NISBA as well as HSBC. That's all this slide really covers. I'm going to quickly talk through our operating performance. I have alluded to a number of these aspects earlier, so I don't intend going through item by item. What I would say to you is the way we look at our financial performances, we look at the growth in top line first. Is our income growing? Yes, income is growing. Clearly, we grew both net interest income as well as fee income. That's the first point. Second thing is we are managing expenses. Expenses are down year on year by 7.2%. We're down in the first half by 7.2%. Clearly, that helps the jaws basically, right? It really helps us from a jaws perspective. Okay, the impairment number obviously also has decreased. Clearly, it is the way we look at our impairment numbers is providing for impairment and ECL obviously in line with IFRS 9 as well as CBO guideline, but also on a prudent basis. We take a 5-year view of how we run the business. It's not run quarter by quarter, and I want to reiterate that fact. The results of that is set out here clearly. Total income grew 5.9%. Our expenses down 7.2%. Clearly positive jaws, and overall 41.8% increase in profit year on year. That's what the slide calls out. If you look at one of the other items here in the slide is the cost to income ratio. Our cost to income ratio has decreased from 50.7% last year to 44.4% this first half. That is better than the industry average at the end of first half. Also, the return on equity you can see is trending up to closer to 8%. Obviously, I expect some questions around some of these metrics. We'll deal with them as we go along. Very quickly, moving on to the next slide. In terms of asset quality, clearly as we said, there was loan growth. Our provision coverage, is at 91%, and total coverage ratio is at 4.9%. And numbers again dollars, so please bear that in mind. And as we've called out, we are also giving you a flare of the exposure and the segments to which we are exposed to. We believe that this is in line with our strategy. We are growing our exposure to the government sector, the GRE sector. So that's my call out on this slide. The next slide that I have is a slide which is very important, which is on capital and funding and liquidity, where what we are covering here is the fact that we are liquid and we are well capitalized. These are fundamental. We don't look at the P&L alone in terms of the way we run the business. Clearly, balance sheet strength is important for us. And as the CEO covered, we did a transaction last year to call out the previous subject, and we have sought approval, and our timing is subject to market conditions. But fundamentally, we are well capitalized and liquid and have improved our profitability metrics. This is what I would call out from these slides really. I'll now stop. There are metrics around the balance sheet and further more detail in the appendices, but I think now is a good point to stop and take some comments and questions. Given that Bishan, you raised your hand first, let's open with your question, if that's all right, please. Thank you.
Thank you so much, Giri and the team. I'll go back to my questions. The first one's around the capital adequacy. I've noticed there was a comment earlier. I'm sorry, I missed that. Did you mention there would be some issuance down the line? Is that what the bank is targeting? If you could just sort of clarify that, please.
Yeah, this is Abdullah. I mentioned that we sought an approval from shareholders that was through an EGM the first quarter, or with the OGM that happened in the first quarter of this year. We received their approval to raise up to $300 million through a perpetual structure issuance. At that juncture, the global markets were open, but then when we completed the procedures, the market has become slightly more difficult, and you would be familiar with some regional names raising during this year and paying hefty pricing. Those are not prices that we are keen on. So we are tracking the market, and we have the approvals in place and looking at opportune time to raise the funds, or through either a public issuance or private placement, etc., depending on which route that offers us the best option.
Noted. Thank you for that. Yes, that's clear. My next question is with regards to modified loans and restructured loans. Given how the economy has been, and we're in the post-deferment period, or at least partially in the post-deferment period that was imposed by the CBO and lifted on 31st December, we've been closely tracking the restructured loans for all the banks, and fortunately, NBO is doing well on that metric. So that's good to note. But sort of, what is your view on sort of the NPA buildup going forward once the actual payment period, starts for most of the SMEs or for your clients? If you could just comment on that.
So hi, this is Balaji. I would like to say a few words around this restructured portfolio. As you said, that we've been seeing this space for a while. In 2020 and 2021, where we were in the terms of pandemic, the borrowers are also not in a position to come up with a cash flow. They are also assessing the situation. But then what we see is that most of them have gone back to the normal terms. Some of them who are affected are in the restructured space, and they are all at this point of time not well aware of their cash flows. They can come back to us on the revised terms. And as you see, the CBO has given us permission till the 30th of September to restructure all these groups. And
Okay.
So this is background noise.
Yeah. Okay. That.
Does that answer your question?
Yeah, that's fine. I just wanted a trend on that. There was another metric that was highlighted in your notes on an annual basis, which is the modified loans, and that was basically, during COVID, what percentage of your book was modified and what was a deferred portion, and just wanted to link that back to the current scenario. As of December, almost 6.3% of the net loans was the deferred portion. Now, how do you see that also panning out? Is that similar to what you answered, saying that you would be in a better position to answer post-September?
that's correct. Yeah.
Okay, understood. That's fine. Next question is, I've seen the performance. It's been very encouraging. It's been excellent. And like the CFO mentioned, we're also pleased to hear that the bank is here for the long term. They don't have a short fix. They would rather do things right in the longer term. And that's pleasing to see. Cost of risk is something we've seen, fall significantly in the second quarter. What would be a marginalized or a normalized cost of risk sort of number or a target for the bank, at least for the longer term, if we can have a reference point?
I think we've just come out of the pandemic, and we've got a year where interest rates are going up, inflation is pretty high. I'd be very careful in sort of saying to you a normalized, number. What I like to see is different to saying that this is going to be normalized.
Rather, I would say that, again, this is Abdullah, rather than talking about that, what actions are we taking? We are pivoting our book to look at more higher quality assets. Number two, we are still progressively enhancing our provisioning amounts, but we are also being more prudent in that perspective. Third element, we don't shy away from any need for restructuring, and that's actually helped us that by September, probably before end of September, we would have maybe a couple of restructuring that is required, and most of them are large restructuring that many banks are involved in that restructuring exercise. So actually, the actions that we are taking are hopefully keeps us at a better position than what we were at least before the pandemic. So these are kind of actions that we are incorporating in our day-to-day work.
I mean, you look at this Giri again. So you look at our cost of credit, you average as the first half, 50 basis. Now, would I think it's higher? I think, optimistically, I'd like to think that that's high. But look, this is an area that, as the CEO mentioned, we've tightened. MBO's learned from its past mistakes, I would like to think, and we are focused on Oman now in terms of our lending. So let's see.
Another element is the recovery side as well. We are looking at every single NPA of even of the past, even all the NPAs. We're going through each list, be it Oman-based or UAE-based or even Egyptian-based, although the operation stopped for some time now in Egypt. So we are going through that and scrutinizing each possibility to ensure also recoverability. One, it helps on the bottom line, but also it helps us in the requirement in terms of any additional provisioning requirement.
Understood. Yes. The next question with regards to loan growth. You've mentioned that you've been growing fast in the sector and you're doing it selectively, and you've been targeting the government agencies when it comes to deposits. Would we see this trend going forward as well, where you would probably grow faster in the sector to gain market share, albeit at a sort of as a prudent approach? But would that be the trend going forward?
Definitely, the opportunities that we've seen the last 18 months has been in government and GREs opportunities. We think this is an important segment for all the banking sectors, and we see other banks are also following suit there. But like I mentioned, one of the key strengths of NBO is the long-standing relationships that we have with private groups and private companies. Although maybe in the last few years we've lost or we've not maintained those relationships, our focus is also to rebuild those lost relationships if they were lost, and build on the existing ones as well, and enhance our growth opportunities from there. But definitely, in my humble opinion, the growth mainly will come from continued expenditure by GREs. We attended an event by Oman Investment Authority and the different companies under their umbrella, and they were talking about large investment outlay that they're exploring and looking at. Definitely, NBO is well positioned in terms of taking some of those opportunities, and not only from the lending perspective, but we are looking at enhancing. Again, this is a pillar of our revenue, or an important element of our revenue pillars, enhancing through other means, for example, investment banking, advisory side. We've built a good franchise in the past, but we're going to enhance that further, and we're looking forward to capturing some of that opportunities and businesses as ancillary revenue streams.
Understood. Yep. Thank you. That's clear. Next question is with regards to your view on net interest margins. How do you see those panning out going forward? I mean, we've seen interest rates rising. We've seen a bit of a challenge when it comes to cost of funding. How do you see net interest margins sort of panning out over the next sort of by, let's say, in 2023 and beyond that?
Look, great question. Once again, be guarded in terms of forward-looking guidance. However, I would say to you that we are working, and you would expect that given net interest income is 70% of our income, has to be very focused on both cost of funding as well as what we lend at. Clearly, as we sort of get to more GRE lending, for example, then that comes at a sort of a lower price, right? So clearly, we are balancing those aspects. I'd expect this to stabilize, at some stage, right? Banks are competing with pricing as a lever. You see in the local market on how many promotions that are going on in the personal lending space, for example. And the prime lever for all of this is pricing, right? So we are guarded, is all I would say, Vishnu, and we expect it to kind of stabilize. And obviously, from our perspective, we'd like to see it going up. but also balancing the fact that we've now gained our gaining market share. I wouldn't say gained. The gain would seem we are completed. No, we're not. We are gaining market share, and we'll continue to do that with balancing NIMs as well. If it's okay with you, I would suggest we come back to you for questions, given there are other people also asking questions. Yeah. I will come back if you had other questions. Is that all right?
I just have one final question, and then I can wait into if that's okay, if you'd allow me. Else I leave that to you. Just one question. This is with regards to acquisition. In the past, one of your calls, I think a couple of years ago, NBO specifically mentioned in the banking space, probably Hali Bank would be a good fit. But I want to expand that question, asking whether that's still valid. And if you're looking at any consolidation in the leasing sector, players out there who have excellent, operating metrics, very clean books, SME sector exposure, someone like Alomania. Is that something the bank is considering? If you could just answer that question kindly. Thank you so much.
So we cannot comment on any kind of specific needs. It's something we review with our board continuously. But also don't forget we are in the beginning of a transformation journey. So there's a lot of hard work and efforts are going to look at the situation internally and to ensure that NBO is best positioned to capture the business opportunities that are there in the market. By its nature, M&A tends to take away from that focus because there's a negotiation, there's a lot of integration, and many other distractions that an M&A can bring to the table. But nevertheless, anything that is positive, that is accretive for our shareholders is something that we pursue with kind of quite enthusiasm and whatever strength we have. But at this stage, we are tracking the market, and we are also focused on the transformation of NBO and ensuring that we are fulfilling the promise we gave to the board when we presented the 5-year strategic plan in itself. That's quite an ambitious, but we have full commitment in ensuring that we achieve those targets.
Noted. Thank you so much, gentlemen. I'll come back later.
Thank you.
Hanaina from U Capital, apologies for that. Do you have a question for management?
Yes, I do. Good afternoon. I am Hanaina from Obar Capital, and I have a few questions. May I?
Yes.
Okay. I'm sorry, I might be repeating some of the questions already raised previously by Bishan, but just for clarity purpose, you mentioned about the $300 million Tier 1 perpetual approved in the EGM recently. I just have a question. Is it going to be, whenever it is it going to be Tier 1 perpetual, or could we expect a rights issue or something to boost instead your common equity Tier 1? Given that your...
Yes, Amina, this is Abdullah. It is per part of the 81. It will not be a rights issue.
Okay, thank you. Can I ask another question?
Yes.
Okay, this is regarding the CASA ratio for the bank, which has increased significantly recently. What's the reason for that? And what's the nature of these CASA deposits? Are they fleeting or are they sticky? Are they going to be around?
Yeah, I'll pick it up. Hi, Nabi. So, look, CASA is a area of focus for us, right? You look at our balance sheet mix and cost of funding, clearly, we very, our retail engine between 2016 and 2018 or 2019 and started a little bit of finance era, right? Because we hit the lending ratio ceiling, and therefore we kind of stopped some of the activities. As I mentioned, the 5-year strategy sets out a strong franchise, customer-led franchise, building a customer-led. That's what we're doing, and hence, obviously, the focus on CASA. We continue to focus on CASA at the right price, and hence you see the CASA ratio in June 2021. Our CASA was 63.5. Prior to that, when I first started here, it was just under 60%. We continue to focus on that, and now at the end of June, we were at 65.6%. These are sticky. Obviously, they do have a component of government deposits. But we also have a customer-led, as I said, a retail customer-led focused franchise, which is attracting CASA from retail customers as well, is the answer to your question. Thank you.
I also want to relate this to the pillar of revenue as well. One of the key businesses that we are focused on is transaction banking. This is more on the corporate banking side, so a lot of funds that flow through CASA is through floats, etc. As well as we have a very strong payment business through our card franchise. Again, that helps us on the float side as well, which are drivers for improving our CASA.
Thank you very much. Can I ask a couple of more questions, if it's okay?
Go ahead.
Please do.
Okay, please. I just want to know, what is your target cost to income ratio for the next 3-5 years and your targeted ROE?
Sure. Sorry, Hunaina, we don't have to give guidance, but definitely the past clearly demonstrates that we are above industry average. Our aim to be an efficient entity compared to the banking industry.
So if you look at our CASA, cost income, which was your first question, clearly, we reduced our cost income ratio to 44.4%, as against industry 46.3 at H1. We want to improve on that, would be a comment we can share. Similarly, return on equity of 8%, you asked, no rights. I mean, we'd struggle, the CEO and I would struggle to go to the shareholder and say, give us capital when we are generating 8% return on equity. You know what I mean? So that's also the thought process that we have.
All right. Thank you so much.
Thank you. So let's go to Joyce. Hey, Joyce, how are you? Please go ahead with your question.
Hi, Abdullah and team. Thank you for the presentation. My question is just answered. One of my questions just answered. It was about the cost to income ratio, but I see that your cost to income has declined, and it's not only a function of increase in operating income, but it's the absolute number also is coming down. So my question, if you can give us some clarity on where do you see the cost to income ratio or the cost as such, the absolute number going forward, and what's the comfortable level that you will be looking at?
Okay. So I'll start. I'll attempt to answer it first. So first, we cannot give you guidance, Joyce, but definitely you're right. A lot has been done in terms of rationalizing and optimizing the expenditure side, but it doesn't mean that we stopped spending, because I mentioned in on the slide of the 9 pillars that we are spending, for example, on the brand, on the technology side. So we are spending money, but we're spending money in the right place, and we hope to improve the effectiveness and efficiency of that spend. Definitely, you cannot have a strategy based on just cost cutting and cost containment. So our aim is to ensure that revenues are also enhanced. And again, refer to the pillar of revenues. We're looking at every potential business lines and basically fire those different engines to ensure that revenues are generated to enhance our cost to income ratio. So one, in terms of the past, we are spending money, but spending it wisely and ensuring it goes in the right place and enhances our business or profile or brand situation. But more importantly is on the revenue side to enhance it through different kind of business lines. Like I mentioned, remittance is one piece, wealth management is another, banker is also a third piece that we are looking at.
So, and I just wanted to add a couple of other points. Thank you. One, just as Abdullah mentioned about the costs. I have the analogy of good cost and bad cost, right? Clearly, we have now a very disciplined approach to spending, and I also will relate it to a 5-year view or a longer-term view that we have on cost. So while we continue to manage cost, we are also investing for the future. It's important that we invest in the brand, you see MBO being more visible in the market, and also our technology platform. We just launched a new mobile banking app, right? So we are, or a better version of it. So what we are trying to do here is eliminate waste and also duplication across MBO in terms of various functions and businesses. That's a key aspect for us, whether it be work that's been duplicated into units across the bank, or in terms of collaboration across the bank and where we can eliminate some of these waste aspects. That's an area that's personally driven by the CEO and myself. We're going after these areas to improve our efficiency, and you should expect that we will continue to be focused on that, both through the revenue pillar and the optimization pillar.
The third element of spending as well, which is more important to us, is the people side as well. So we continuously to actually enhance the skill sets. We continue to induct the right people with the right skills. A few years ago, the bank launched a scholarship programs, and some of these individuals have completed their studies and have been inducted into the bank, employed in the bank from outside. So we continuously to invest in our people as well. But like we mentioned, we are spending it in the right places to ensure the appropriate returns for the shareholders.
Got it, Abdullah.
Thank you.
Thank you. Just one more question. One more question on this, if I may.
Please.
Yeah, Abdullah, you just mentioned about improving the income mix. Right now, you have around 25% of your income coming from non-interest income, and you said you're focusing on non-interest income primarily from investment banking activities. So, how much room do you have for improvement in terms of in terms of more contribution from the non-interest income into the total operating income?
Yeah. So look, we look at last year, then we were at about 27%, and this year I would think we're closer to the 30% mark, right? I do think there's room to improve that a little bit higher, based on some of the things that the CEO just talked about, whether it be remittances or bank or products like that, and also transaction banking, right? Clearly improving that and improving our capital utilization continues to be an area of focus for us. I don't want to set out a particular percentage as a target for us. Personally, would I see it north of 30? Yes, I'd like to see it north of 30. But again, it's not about achieving that number for one quarter and then going down. On a sustainable basis, I think that is what we are addressing, Joyce.
Okay. Thank you, gentlemen. Wish you all the best.
Thank you.
Thank you.
Monet, you have questions again?
Yes, just a couple. One is, I just wanted to ask you again, what are the credit conditions on the ground like? Is credit demand visible, and which sectors are showing recovery?
Like I mentioned, the big opportunities we still see are within the kind of GREs or the companies under the umbrella of Oman Investment Authority. I think it was sometime in the past Ramadan, there was an event that all bankers and other, I think some analysts and media were invited, where a lot of investments that were presented by each of the companies controlled or under the umbrella of OIA. So it's not that one specific sector: food, fisheries, oil and gas, telecom. Each one have talked about opportunities in different avenues, mining sector. So the opportunities within the OIA Fund covers many sectors of the economy. With better oil prices and better the improved revenues fiscal position of the government, definitely will see enhanced recovery and enhanced economic activity as well from the private sector. So we hope the usual economic sectors of the economy also to offer us opportunities there. And that's our focus, to rebuild and enhance our relationship with the private sector, pure private sector again. This is part of our approach in the near future.
All right, thank you. My last question is on the outlook for dividend for 2022. What kind of cash payout can we expect?
This again, we cannot discuss this. We haven't yet discussed this with the board. This is, of course, subject to board and shareholders' decision. Our aim is to ensure that we perform, we achieve the profit level targets that we have, to ensure that we go back to the rightful dividend distribution, subject to the right mix in terms of capital structure as well. So that has to be discussed with the board sometime towards the end of this year, and again, it's subject to shareholder approval at the OGM early this year.
All right, thank you so much.
Thank you.
Any further questions from anyone?
Just sorry, this is Hunaina again. Can I ask one?
Go ahead.
Okay, just one. I think this question has been asked before, but just for clarity again, what is the final moratorium period extension like? I mean, when does the bank expect the final effects of pandemic to be over by?
The final moratorium period, as stipulated by CBU, is 30th of September.
For private
Yeah.
End of September.
30th September. Okay, thank you.
Any further comments from attendees? Any last words?
Yeah. From our perspective, before I hand over to the CEO, we took an action to be more communicative, transparent with you, and share with you our perspective of what's happening in NBO, and hence this regular engagement. This is one of the asks of the investor/analyst community here locally. That's what we're doing. I hope you do find this useful as we find it, and thank you for your time.
So in the same kind of tone, I think thank you for this opportunity. We are also happy to get your feedback in terms of the information presented here. If you require a change in terms of either the quantum or the quality of information, subject to regulatory limitation that we have, we are happy to hear from you. Our aim is to improve NBO's profile with the investor community, specifically this year. This is a third event. We are participating with different set of investor base, and our aim is to continuously be at the forefront of investor relationship in the country.
And thank you to Muscat Stock Exchange for organizing. Okay, with that, we can conclude today's session. Thank you all for attending. And you have the contact details of the Investor Relations Officer. If there's any further comments or questions, you can contact Mr. Bilaji. Assalamu alaikum.